As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're delighted to have an insider guest today, Edward Karr, the president and CEO of US Gold Corp. He's a founder of several investment management and investment banking firms based in Geneva, Switzerland. He sits on the board of several mining and resource investment firms. He's been active in the natural resource industry for years. He's here with us on Reluctant Preppers to give us an insider's view of what's going on in the gold and precious metals mining industry. He's here with us, and we're glad to have him on Reluctant Preppers. Mr. Karr, thank you for joining us here.
Dunnigan, thank you so much for having me, and thanks for the interest in US Gold Corp.
A lot of our viewers are quite keen on real money, sound money, gold and silver, as well as the reason that they are is because of their desire to reduce systemic risk to their families that are imposed by a increasingly complex, interdependent, and potentially too big to fail, but perhaps more likely to, international banking complex, and the derivative exposure, et cetera, the fiat debts and that sort of thing that impose potentially catastrophic risks to their families' finances. We've all had a taste of some pretty significant disruptions around Y2K, what happened after the dot-com bubble burst, 2008 financial collapse in the U.S. and related banking unwinding from that. And since then, people have seen kind of this ever-increasing reinflation of potentially asset bubble prices in some areas that seem to be driven by systemic policy forces and increasingly complex derivatives and debt exposure across countries of the world. So there's continued to be riveted interest on the part of our subscribers to what's really going on in the economy, and then they turn to the resource sector potentially as a safe haven in the case of things that they can't control, forces they can't control that are going to conspire and transpire in the bigger picture. So if we could start with that big picture about the economy and the global economic picture, and give us your view, because in your international banking and investment experience, you certainly work with and talk with a lot of people who are making big dollar decisions, big money decisions in the areas of investing and finance, and who have to think a lot about risk and a lot about exposure and a lot about the choices that are out there based on what's going on. So could you give us your view of sort of the macro factors and macro trends that you see unfolding on the global economic scene?
Sure, I'd be happy to do so, Dunnigan. And I'm first off just going to say I'm so happy that your listeners and subscribers are so well educated. Most of the people still out there in the world, as you know, really don't know much about physical gold, physical silver, the value of these assets to literally protect one's family and wealth in times of financial turmoil. And I view the precious metals really as insurance policies. You know, most of us have car insurance, and why? I don't wake up in the morning and decide I want to go out and get into a car accident. But just in case that accident happens, I have car insurance to pay for the damage to my car and, heaven forbid, the damage to anyone else. So precious metals give you really that insurance policy within your portfolio to protect yourself and your loved ones from this incredibly volatile global world that we live in. So let's take a little look at the macro landscape, and here we are, September of 2017. Stock markets in the United States are hitting all-time highs. We see the Dow hit a new high, the NASDAQ, the S&P. Everything's great. The politicians and the economists all tell us we got great growth. Everything's going wonderful. But is it really? From my perch here in Geneva, Switzerland, I look around the world and I see a lot of reasons to really start getting nervous. And we got to start thinking of battening down the hatches now. We've got tremendous global instability. We've got, when we just look at the geopolitical risk in North Korea threatening to launch nuclear hydrogen bombs into the Pacific Ocean, President Trump going to the UN and using tremendous rhetoric to call him out. This really seems to be ratcheting up. And that's something to watch. When you look at these countries around the world, and you pointed out in your introduction, Dunnigan, that 2008 financial crisis, which was extremely severe, And all these central bankers who are predominantly academics, most of the central bankers have not really worked in industry, so they rely on their mathematical, econometric, financial models to try and save the world, and they went all in. So now we have central banks that have blown their balance sheet out to unprecedented levels. We are in uncharted territory all around the world, whether it's the Federal Reserve, the European Central Bank, the BOE, the BOJ, the Chinese Central Bank. They have all done tremendous quantitative easing, i.e. money printing, to try and soak up all of these bad assets out there. And the Federal Reserve, specifically in the United States, has just recently announced that they are going to start unwinding a $4.5 trillion balance sheet. And when you look at that stimulus that they put in, they've blown their balance sheet from $800 billion up to $4.5 trillion today. And that has gotten us very subpar growth. This has been one of the slowest recoveries ever coming out of an economic recession. And so now that they have to unwind that, this starts to get scary. When you look at other institutions, the Bank of Japan has absolutely gone crazy. I think that they are literally insane. They have monetized a tremendous amount of their government debt market. The Bank of Japan is one of the largest stockholders in the Japanese markets. And in my own country here of Switzerland, the Swiss National Bank, when you look at their leverage ratio, is one of the highest leveraged central banks in the world. The Swiss National Bank is actually a publicly traded company. So it's on the Swiss Stock Exchange. The stock has gone crazy because we're living in this asset bubble that all the central banks are pushing up. And when you look at this and you look at some of the holdings of the Swiss National Bank, some of their largest holdings are Apple Computer. So I just start to shake my head and wonder, why is a central bank buying something like Apple Computer? And when I look at all this funny money, for lack of a better word, that has been printed, that's swashing around, you mentioned the derivatives, Warren Buffett called them weapons of financial destruction. So we are living in a real volatile world, and this very, very interconnected world. So it could literally break down at any point. So we're starting to see now the precious metals come off the lows, specifically gold and silver. Gold made a low after the real bad bear market. The bull market peaked out in the end of 2011. We kind of crashed down to $1,000 an ounce in US dollar price around beginning of 2016. And today we're up to $1,300 an ounce in gold. So I think people are starting to accumulate more of the physical metal. And that's what you really want to get. Real ounces, real bars, real physical metal. That's protection. You don't want to have the paper gold. You don't want to have the GLD or the ETFs out there, because ultimately you don't know. And in Switzerland, we have always preached for years, any investor should first have 10% of their entire net worth in physical precious metals. And you got to think about that. When you look at your entire net worth, your home, your property, your business, your stock market portfolio, your money market accounts, you add it all up, do you actually have 10% of your net worth in physical precious metals? Most people don't even have 1%, never mind 10%. So that should form the basis. And then from there, you can start prudently building a portfolio. When you look at the mining sector itself, as we get this rise in the precious metals price, as we get a rise in the base metals, which has been happening over the course of the last year, these companies should really become more and more profitable, the major miners. And then as we set up a new bull market cycle, which I believe is just starting right now, the mid-tier and the junior exploration companies like US Gold Corp could have real potential to go on another major run in the next couple of years. So it's a very exciting time for the sector.
In the gold market specifically, our viewers have been keenly watching that over the past several years. Many of them have been accumulating physical precious metals for some time and have been stumped at the behavior as observable, documentable risks that you just gave us a litany of have continued to increase. You would naturally think, in using common sense, that sort of flight to safety would have driven demand, and we certainly have seen in recent years record demand, sometimes month after month and quarter after quarter, for precious metals, and yet the price that those metals are being sold at, it seems to be continued low since 2011 high. And if you could give us your view of what's going on with this apparent disconnect between high demand, high common sense reasons for that demand, and yet low prices in the gold sector.
Sure. Well, I think the easy answer is clear manipulation. And the gold price and the metals price, especially the paper contracts, are clearly manipulated by the major money center banks and ultimately led by the central banks. And why would they want the gold price to be lower? Well, there's a couple reasons. Number one, a lot of these central bankers are very, very scared of inflation. So they don't want to let the population know that there is inflation out there in the system. And the precious metals tend to be an excellent proxy for inflation. But all of us know when you look at things like your college education bill, your health care bill, your transportation bill, your energy bill, the price of gasoline at the pump, there is inflation out there. But if they suppress the price of gold down, they can keep those Social Security entitlement, Medicare, cost of living adjustments very, very modest. And that helps the country because if they really started increasing those, it would just be bankruptcy. Other reasons, you look at some other countries outside the United States, and there's countries like China, like Russia, like some of the Middle East, Emirates, they have actually been buying, if you look at the central banks and the World Gold Council statistics, more and more gold. So if you're China, you're actually trying to get some real credibility on the global stage for your country and your currency, and you're building up your gold reserves. It's certainly in your interest to try and buy the physical gold at the cheapest price you can. So you could knock the price down in the futures market, the paper market. You could buy the physical gold. And China is a huge buyer of gold. They buy all of their production domestically in the country, and they import gold through Hong Kong, through Singapore, into the country. So they've been major, major buyers. A lot of people believe at some point in the future, we don't know when, China will come out and show how much real gold reserves that they have. So I think that keeps the price kind of depressed. And there's a lot of reasons. So I've always counseled, investors and people that I talk to, you want a dollar cost average, every month that you can. Don't really worry about where the price is right now, because one day the price of gold will ultimately be a lot higher. And that could be just due to a decline, say, in US dollars. The US dollars had a little bit of a decline recently, but it's been quite strong in the last several years. If you look at the price of gold in many different currencies, from the Mexican peso, the Colombian peso, et cetera, it's actually bumping up against all-time highs. So you want a dollar cost average all the time. And the purpose of gold, when you think about it, is this real preservation of wealth. Look at a country in the hemisphere of the United States, Venezuela, that is just absolutely melting down. This is, an economic bomb that's happening right now in Venezuela. The currency has completely blown out. They have complete economic collapse. And why? It's so sad when you look at that. Venezuela is a very rich country, educated workforce, tremendous natural resources, member of OPEC, but yet due to political mismanagement. And that's the biggest enemy of the common man, in my opinion. Politicians who mismanage the governments, mismanage the economy, and ultimately the average folk pay the price. So if you were in Venezuela and you had a good portion of your net worth in gold, you could still buy food, you could still buy medicine, you could travel and get out of the country. But if you're sitting there holding Venezuelan bolivars, the only thing you might do now is start a little campfire and stay warm for about 30 seconds because they are literally useless. We saw the same thing happen in Zimbabwe. We've seen the same thing happen in Yugoslavia. We've seen the same thing happen in Argentina. We saw the same thing happen in Germany pre-World War II. So this has happened time and time and time and time again. And ultimately, probably the US dollar is going to have its day as well. So people really need to protect themselves.
If we could turn our attention now to the natural resources mining sector, you work with people who are making major investments in that throughout the world, and your own companies that you sit on the board of, and the one that you're a chairman and CEO of. If you could talk to us about what the major trends, one specific question, it's related to what we just talked about the suppressed price of precious metals. People have been warning us for years, analysts on the market sector, that it will be difficult for many mining producers to continue operations under these depressed prices, that the amount of capital investment and OPEX expenses to maintain and to operate major discovery and development and production for precious metals requires a certain amount of profit margin. And in these depressed prices, this environment is extremely putting a lot of pressure on those who don't have the best cost management and that sort of thing. Can you talk to us about what you're seeing? Is that trend playing out? Have we seen consolidation, that sort of thing? What do you see as the major trends in the mining industry from a business perspective?
Yeah, great question, great point. And the last big bull market that we had in this sector really peaked out, as I mentioned, the end of 2011. And what happened is a lot of the major mining companies, even mid-tier ones, they made a lot of acquisitions based upon these rosy forecasts for gold, silver, base metal prices in 2011. We were at $1,900 gold. If you had a project, a mine that had $1,700 gold all-in sustaining cash cost of production, hey, it looked pretty profitable, especially if you thought gold was going to $2,500. But after that massive bear market, and this has been one of the worst bear markets in the last 40 to 50 years in this industry, really, really difficult from the end of 2011 all the way really until now. But the good news is the major mining companies are in really good shape today. They have divested a lot of these very, very unprofitable properties. They've literally gotten rid of them. They've cleaned up their balance sheets. A lot of these guys took on tremendous debt to try and go on that merger and acquisition boom. So these guys have refinanced the debt at lower levels. And now with the gold price really rallying 30% off the lows, the mining companies are in great shape. You can go out and you can look at the quarterly reports of the big majors, the Barrick Golds, the Newmont Minings, the Anglo Golds, the BHP Billotins. They're really starting to look good at $1,300 gold. So a lot of us in the industry think, now's the time. This new bull market is setting up. The price of gold is going to continue to increase, we believe, into 2018 and beyond. If we get into $1,400 gold next year, a lot of these companies become really profitable and they throw off dividends and cash flow. When you look at relative value investors out there, do they want to own Facebook, Amazon, Apple, Netflix, Tesla at these incredible all-time high valuations? Or are they going to take some chips off the table and deploy them into a Barrick Gold, a Newmont Mining that have really good financials now, solid balance sheets, and are paying dividend yields? And then as that happens in the sector, so the big majors continue to do well, they push forward, then they're depleting their existing mine resource every day. Every day they mine ounces, So they need new ore bodies, they need new reserves. And so the junior companies like ours, like US Gold Corp, we go out, we try and prove up new discoveries. We have this tremendous property called Keystone, which is located on the prolific Cortez Trend in Nevada. We're just 10 miles south of Barrick Gold's Cortez Hills mine, and we're trying to prove up a new discovery there. And we're confident that if we can prove up a discovery, our lead geologist, Dave Mathewson, is one of the most credible guys in the industry, and he believes it's the best exploration property he has seen in his entire 50-year career. So if we're capable of proving up a discovery, that's something where the big majors will need that ore in the future, especially as the gold price continues to go. So the whole sector is really, I believe, on the edge of a big bull market rally. And this is a cyclical sector, the natural resource sector. So one of the most important things to making money in this sector is to getting the macro timing right. You could be in the best mining companies, the best junior gold exploration companies, and if you're in a bad bear market, probably the stock price is going to go down. If you're in the beginning stages of a bull market, like I believe we are today, this is the time to really start initiating positions, accumulating good quality companies. And over the next 2 to 3 years, if this bull market really builds up the way that we think that it can, I think it has the potential to be one of the most exciting bull markets in the last 40 to 50 years.
returning back to the individual, family, and homeowner, somebody who wants to reduce risk, you specifically mentioned that the guideline, that's well-seasoned guideline of 10% physical precious metals in possession to guard against catastrophic losses that people in like countries, as we've mentioned, like Venezuela, et cetera, have suffered. But in addition to that, can you turn that coin over and look at the upside potential? In addition to just preservation against loss, how can people participate in potential growth as public sentiment gets no longer distractible from the realities of inflationary pressures and devaluation of fiat currencies, but what wants to find safe haven to invest in real metals? Once that becomes part of the cultural mindset of the time, which we've had a little 6-year break from people thinking about that since 2011, but looking forward that's going to return. How can people participate in the upside as well?
Yeah, as I said, I think now's the best time to start getting positioned. So an average investor out there, they should look at their own portfolio, their own net worth. Make sure you have that foundation. A strong home is built on a really good foundation. That foundation is the 10% physical gold and silver. Have a combination of both. After that, if you have an investment portfolio and you want to start really looking at some potential high returns, this sector can provide incredible returns if you can get the right companies, the right projects, management teams, and the macro correct. So again, I think we're in the first inning of a 9-inning ball game. Now is the time. So I would highly encourage your subscribers to go out and build a portfolio. And that portfolio should certainly have some of the real high quality major mining companies, because you'll get nice upside. You'll get capital appreciation and better dividend yield than you would have cash sitting in a money market account. But then you also, if you want to get the real high returns, you need to have some exposure to the junior exploration companies. So these are the real lottery tickets. Very high risk, but very high return as well. You look at a company like ours, US Gold Corp, we're about a $30 million market capitalization today. We have a property in Wyoming called the Copper King Project. It has a defined resource. There's a historic PEA, a preliminary economic assessment out there that shows that ore body, that deposit, has $160 million net present value. So that's really attractive. We're only trading at a $30 million market cap today. And then investors get this incredible embedded option for the blue sky upside of our Keystone project. If we're successful in hitting a discovery hole there and drilling into an ore body, it gets real exciting real quickly. And whether it's US Gold Corp or one of the other, really good junior exploration companies, if they are successful in delivering the fundamental results, these stocks historically can go up 5, 10, 20 times. So even having a small allocation in your portfolio, if you can hit one and get that sort of return, it can have a significant effect on your overall wealth. And ultimately, you want your portfolio to stay ahead of inflation, because if not, it just loses money every single year.
Ed, I think we covered most of the major topics that we wanted to today, but I'm going to start a new tradition here, asking every guest on our program to give us one sort of personal anecdote of something that they've done, a decision they've made at their family, their household, or something that they've seen that says, this is one specific thing that I've started doing or stopped doing to help increase the security, the safety, and ensure that, reduce risk to my family going forward. Is there something just, very specific that you go, yep, we've started doing this, or we no longer do that, or something that you've done as a family?
Well, as I tell you, as a family, and I have a young daughter, so one of the biggest joys in my life is spending time with my young daughter and educating her in what real money is. And, to me, real money is not fiat currency. It's not paper, depending on whichever currency it could be, US dollar, Canadian dollar, British pound, euro, et cetera. Real wealth is precious metals, physical gold, physical silver. On her birthday every single year, I either get her a 1 ounce silver coin. If it's a special occasion, maybe a 1/2 ounce gold coin. And she's had them. She holds them. She puts them in her own safety deposit box. These are not in a bank, in her own safe. And so she has this culture from a young age of really understanding it. And that was passed down to me from my grandfather in the United States, who actually grew up in the Great Depression of the United States. He remembers those tremendous bread lines. He remembers, unemployment at 30%. And history has a funny way of repeating itself. So I think one of the most important things anyone can do to really ensure their financial safety, their overall safety, is just have that insurance policy, have some real good allocation to the physical metals. Again, don't worry about the price. Just keep adding to it. And I think at the end of the day, it's going to be about how many ounces you own rather than, the ultimate price of the gold or silver coins you have.
I want to add an additional corroboration of your testimony there about taking the time to really talk to, educate, and train your daughter in this case, or close family members about the reality of what's going on. And I wanted to accentuate what you said to say the other thing that no one can take away from you that's permanent and real is that time that you spent one-on-one with your daughter or with any beloved family member, the time that you spend with them one-on-one and the experiences you share together and the investment of your time and your full attention to them, no one can ever take that away from you. So that's socked away in the bank of love and of goodwill, and it's an asset that no one can take away that you built with your family. So congratulations on making that step, and it's something we can all take away as a lesson as well. So we've been talking with Edward Karr, the president and CEO of US Gold Corp. Ed, before we wrap up, is there any one final message that you'd like to leave with our viewers?
If your viewers want to follow our company and get more information, they can certainly take a look at our website, which is www.usgoldcorp.gold. We're publicly traded on the NASDAQ. The symbol is USAU, so US Gold. And, we think it's a real exciting time for the industry, for our company. We really appreciate your interest. And it's a great sector, and I think the timing is just really right now. So I'd highly encourage all your subscribers and listeners, do a lot of homework, do a lot of due diligence, find the good companies with good management teams and good projects, make some prudent investments, and then just hold on for the ride.
Well, thank you, Ed, for joining us on Reluctant Preppers. We've always been grateful for industry insiders to be able to join us here. We're delighted for having a perspective from Switzerland. We've never had that before. And your international views come to us, as you mentioned, other macro factors that have been going on in the world gives us perspective that's sorely needed here, where we can be so absorbed within our own in the U.S., for example, within our own culture. But thank you for giving us that international perspective and for joining us and sharing your insights with us here on Reluctant Preppers.
Thanks so much for having us, and thanks for the interest in US Gold Corp.